We do want to turn back now to the day's big news on the economy. I'm joined now by NBC News senior White House correspondent Garrett Haake and CNBC senior economics reporter Steve Liesman and Thomas Hoenig, former president of the Federal Reserve Bank of Kansas City. He's now a distinguished senior fellow at the Mercatus Center at George Mason University. Thank you all for joining us. Really appreciate it. Garrett, let me start with you. The president has not been shy at all about trying to pressure the Fed to cut interest rates. What has his reaction been to today's decision?
Well, he's clearly frustrated but not surprised. Even before the decision was announced, he was at an event in the Roosevelt Room talking about his frustration over this and the sort of acknowledgement that rates would stay where they were. I will say that today his critique seemed more policy-focused than it's been in recent weeks, perhaps an admission of some kind that he's not ultimately going to fire the Fed chair for his obstinance on not cutting rates or his handling of the renovations of the Fed headquarters. The president really keeping his remarks focused on the idea that he believes cutting rates would stimulate the housing market and make it possible for home buyers, particularly first-time home buyers, to get in. He also, kind of played chicken a little bit on the interest rate question and what it would do for inflation, saying, bring it down. If inflation pops back up, we'll just raise the rates back up, as though it were just that simple. So I think you're seeing a president who's frustrated, but also has come to terms with the fact that he's not going to get what he wants from Jerome Powell.
And Garrett, of course, we are getting these new poll numbers on the economy. The president underwater in his handling of the economy. I wonder what your sources there are telling you at the White House about the level of frustration. 44% approve, 55% disapprove. This was really his top issue. This was one of the big reasons, Garrett, why he was elected.
Yeah, the president believes economy and immigration were the two key issues that got him elected. And I think there is frustration within the White House and certainly from the president that these numbers aren't better. You've heard it in the way that he's talked about the Jeffrey Epstein case in the last 2 weeks or so, arguing that he's got, in his view, the best 6 months of any president, perhaps in history, and it's all being overshadowed. I mean, for President Trump, most problems are seen through the lens of marketing, and that they don't feel like that they're getting enough credit publicly for the way that the economy has been pretty sturdy. Unemployment has, remained level. GDP has grown, albeit with some sort of interesting side stories behind the top line number. And they just simply don't feel like they're getting the credit that they deserve. A knockdown of the interest rate, something that might stimulate the housing market. Perhaps the president believes that could turn the storytelling around here. But it's just not gone that way.
And Garrett, finally, President Trump announced steep penalties on India, including a 25% tariff for what he's been calling unfair trade practices and for its relationship with Russia. How did it get to this point? Because as you've been reporting, he talked about early on his optimism that he could get a trade deal with India.
There was widespread optimism within the White House going back months that India would be one of the first countries to strike a trade deal with the United States after Prime Minister Modi visited Washington. And I think it was the first month of this Trump administration. That has not come to pass. And it's not entirely clear why. The president talks about India, although it has, as if it had some of the highest tariff rates anywhere in the world. That's simply not true. The effective or average tariff rate that India placed on American imports in 2022, the most recent year we can see the full numbers, was something like 5%. I mean, this was not necessarily a totally closed-off market to the United States. So there's something going on here that's deeper than the headlines have suggested, and we just don't know what it is yet, Kristen. But I will say, as with all things related to this president, this is clearly an active negotiation. So it's entirely possible that what we saw on Truth Social today and the way that the president was talking about this earlier today is meant to help push a deal a little bit closer to completion that may have nothing to do with what we actually heard from the president today.
Well, we know you'll stay on top of all of it. Garrett Haake, thank you so much. Steve Liesman, let me turn to you here now on set. You obviously have covered Jerome Powell extensively. Yes. What do you make of his decision not to raise rates? Certainly not a surprise to anyone, but the messaging as well, that there may be a softening.
Well, the big surprise was that he kind of pushed us off from a rate cut or thinking about a rate cut in September. So he was even more what we call hawkish in the Fed watching business than we thought. Dovish is a guy who wants to cut rates. Hawkish is a guy who wants to keep them tight. In fact, you got a hawk right here, Tom Hoenig, who you covered for many years, but who would maybe deny that. But anyway, the point is we sort of, the market was kind of sleepwalking to the September rate cut. Yeah. We'll get there eventually. But then you look at stuff like this India tariff. We don't know. I asked the chair, listen, You have a better idea what these tariffs are going to be. Are you more certain now? Can you now tell us when you might cut? He said, no, we have a lot of things that we have to know yet. I'll give you an example. We believe, according to a report by Goldman Sachs, that we've seen about a 7 percentage point increase in the average tariff rate being paid. They think that what's going to happen is it's going to double and go to 14 percentage points. So we have not yet seen even half of what we think we're going to get in the economy from the tariffs. I think that's what's holding back the Fed. They do not want to see a repeat of 2022 and a broader increase in inflation.
And the fact that you had two governors dissenting wasn't completely unexpected. At the same time, it's
a big
quite
deal.
Extraordinary, right?
It hasn't happened since 1993.
Talk about why it's such a big deal and what are the implications?
Well, it's a big deal because sometimes, and I've been doing this for a couple of decades now, the dissents can tell you where the Fed's going. It can lead the way, and sometimes it leads you astray. In other words, it's an out there kind of thing. I think they make a case for cutting rates. You can make a case right now, but not if you're the one who's responsible. If it's your watch that you're on and you're the Fed chair, I think you want to be extra careful. Very simply, the Fed is shooting for a 2% average inflation rate. It's 2.7% now. It's higher than they want. They do not want to send the signal that they are going to be weak on inflation because then they think you'll get the inflation that you feared.
And we know, of course, that Jerome Powell doesn't have much longer left in his term. President Trump saying, yeah, he has some ideas in mind about who he might want to replace him with when his term is up. Do you think these Fed governors were perhaps auditioning to be the next Fed
I think
chair?
there was some politics involved in that. And it's important to realize, you said there were two dissents. Well, guess what? There were 9 people voting for holding rates right now. 3 other governors along with the chair. Several other presidents, I believe it was 5 other presidents from around the country. So what's interesting, Kristen, is when you look at how the market is priced down the road, they do not see the replacement for Powell coming in with guns blazing. I'm going to cut rates. It's a very modest outlook in the futures market. So they don't see, you've got to get the whole board with you. And by the way, you've got to bring the market with you because the Fed operates through the market. If the market is resistant, we had back in September the Fed cut, long-term yields went up. The Fed would want to be very careful that doesn't happen again.
It's such an important point and a reminder. It's not a unilateral decision that Jerome Powell
No, it's not just all Powell. Chair's powerful, but not all powerful.
Steve Liesman, thank you so much.
Pleasure.
It's always great to see you. Always great to have your perspective. I do now want to go to Thomas Hoenig. Thomas, thank you so much for being here. And I want to start with the Fed's decision to leave rates unchanged. What do you make of their move? And as Steve was just saying, the fact that Jerome Powell signaled he might hold steady through September.
Well, I was not at all surprised by the fact that he kept rates as they are, and I wasn't also at all surprised that you had 2 dissents. Since one of those 2 dissents, Christopher Waller, gave a speech that was very, very dovish, calling for a rate cut. So that was on the table even going into the meeting. So I think that's pretty important. And the thing is, there's 2 things I think you ought to be aware of. One is tariffs are going to temporarily, at least temporarily, raise prices. They know that, the Fed knows that, and they need to be aware and not play to that by easing in anticipation that this may slow the economy down, but risk even more inflation. So they are playing it careful, as they should, relative to the effects of the tariffs. But the other thing that Powell and the other members are very reluctant to talk about, and that's fiscal policy, which is a big factor forward, since we just passed a budget bill that will have expenditures of about $7 trillion, which is an increase, and revenues of only $5 trillion. So we have a huge deficit coming. That will be stimulative in and of itself. And there will be enormous pressure on the Fed to buy some of that to keep interest rates from rising because of the demand, because of the supply of additional new debt, about $2 trillion a year. And that's got to be a big factor in their thinking longer term. And I think one of the reasons they take September kind of off the table as an automatic.
And just to follow up with you on the 2 governors who voted against holding rates steady, you just heard my conversation with Steve Liesman. What did you make of their decision? I know that you weren't surprised by it. Do you think that it goes beyond politics, potentially auditioning to be the next Fed chair? What did you think was at the root of that?
Well, I think, like Steve, I think there was some issues about being, if you're going to err on the side of easy now, because there's at least a case to be made, and they did make their case, at least did in his tweet, and I think that's a big a part of the factor. And I think the other is just being convinced that that's what they ought to do on the margin, and going ahead and descending at this time to make their point. And like Steve, I don't know that it means September is on the table. I think there's these other factors that I mentioned that will have to be very carefully weighed as they come closer to September, because if they ease too soon with the amount of stimulus that is coming from the fiscal side, they could have an inflationary problem on their hands that they really don't want to have.
And let's talk about the GDP report that we got today, 3%, stronger than expected, but embedded within that, still some signs of softening. What did you make of that number?
Yeah, I thought the number was, in a sense, I think the chairman did it right. You average out, because of the number was really based on a major reduction in imports, which actually adds to GDP in a perverse sort of way, from the first quarter, where they increased imports to stock for the future with tariffs coming, which lowered GDP. So on average, you got about 1.6% growth, which really isn't outrageous at all. Number one. And number two, consumer spending, which also recovered somewhat, is still 1.2% for the second quarter, which is fairly moderate. So things are, in one sense, slowing. And that caused the chairman to emphasize the fact that unemployment is still 4.1%. Open job openings are still over 7 million. So he's emphasizing the labor side of it more than as not having to cut more than the inflation side, which is really well above target at 2.7%. So he's on solid ground for not raising rates right now.
All right. Well, we got a lot of new data today, so we really appreciate your helping us to break down all of the facts and figures and to understand it a little bit better. Thomas Hoenig, thank you so much. Really appreciate it.
Good to be with you.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app, or watch live on our YouTube channel.